Okay, let's dive right in. There was a real mic drop moment recently in the institutional crypto world.
Oh, yeah. Tell me more.
We're talking about Michael Saylor,
Yeah.
the face of Bitcoin maximalism.
Strategy Inc.'s Sailor. Okay, what did he do now?
He was speaking at the BTC in DC event, and he didn't just acknowledge Ethereum. He actually praised its biggest institutional champion.
Praised. Sailor. About Ethereum. That doesn't sound right. He usually calls it, what is it?
Unregistered, experimental, things like that. Yeah. But no, he specifically called out Tom Lee.
Tom Lee from Fundstrat and now BitMine.
That's the one. He called Lee, and get this, the most influential voice representing Ethereum.
Wow, okay. That is big. It's like hearing a lifelong cat person suddenly praising dogs. What's going on there?
Exactly. So that's our mission today, to unpack what this massive pivot actually means.
Yeah.
What's the new corporate crypto playbook look like when the top Bitcoin guy starts tipping his hat to the Ethereum establishment?
It sounds less like a simple hat tip and more like, like a strategic alliance forming.
Yeah. Maybe. And the fascinating part, according to the reports from the event, Saylor wasn't even praising Ethereum's tech directly.
No. Then what?
It was all about the messenger, about Tom Lee himself. He literally said capital flows because it trusts Tom Lee.
Okay, that's the key right there. It's not about the assets code. It's about the person bridging Wall Street and crypto. Trust. Institutional trust.
Exactly. Which brings us to the first big question. Why Tom Lee? Why is he the centerpiece here?
Well, think about his background. He's not some crypto-native developer who came up through, forums and Discord. He's a veteran Wall Street strategist. Fundstrat. That name carries weight.
Right. Instant credibility in those circles.
Precisely. He gives Ethereum a kind of institutional legitimacy it might have struggled to get otherwise, moving it beyond just the tech enthusiasts.
And the vehicle he's using, BitMine Immersion Technologies, that plays a huge role too, right?
A massive role. BitMine, with Lee as chairman, is now the biggest corporate holder of Ethereum, period.
The biggest ETH treasury. What about overall?
Second largest crypto treasury globally, right behind Saylor's own Strategy Inc. and its Bitcoin hoard.
So we're talking serious scale here. Do we know the numbers?
We do. BitMine holds something like 3.23 million ETH.
Wow. What's that worth now?
At current prices, roughly $12.6 billion, give or take.
12.6 billion. Okay. That's not experimental money. That's institutional commitment.
And that's the point. It's a corporate treasury strategy. They're holding ETH on the balance sheet long term, just like Strategy does with Bitcoin. It's a core reserve asset for them.
Which circles back to Saylor. Why would he, Mr. Risk-averse, Mr. Bitcoin is the only sound money, endorse a strategy built on an asset he, used to dismiss?
Because it's not just Lee acting alone, this BitMine model. It's backed by some very big, very traditional names. Think Cathie Wood, think Peter Thiel.
Okay. So the institutional backing is already there. Saylor's acknowledging the reality on the ground.
Exactly. He sees that Lee has successfully, in his words, merged Wall Street with the crypto economy. He's commercializing it, legitimizing it. Saylor respects the structure, the capital flow, the institutional framework Lee has built.
But isn't it still a contradiction? Saylor's whole pitch for strategy holding Bitcoin is its security, its predictability as sound money. Ethereum has a different risk profile, doesn't it?
It does. But look closer at what Saylor said. He even called Lee's engagement with Vitalik Buterin, Ethereum's co-founder, a net positive. Why? Because it commercializes, legitimizes, and rationalizes the movement.
Rationalizes. Okay, so he's not saying Ethereum is sound money like Bitcoin. He's saying Lee has made holding it a rational institutional strategy.
Precisely. He's not adopting the Ethereum ideology. He's acknowledging the capital structure Lee has built around it. It's pragmatic. It signals we're moving past the ideological wars.
Which leads perfectly into this idea of a new corporate playbook, right? Moving from Bitcoin versus Ethereum to Bitcoin and Ethereum.
That's the core shift. Saylor's endorsement basically puts an official stamp on it. They're not just rivals anymore. They're becoming seen as complementary assets, distinct roles in a modern corporate treasury.
So let's define those roles. We have the two models now, side by side.
Right. First, you've got Strategy Inc., Saylor's company. They pioneered the whole corporate Bitcoin treasury idea. What is it now? Over 640,000 BTC?
Something like $70 billion worth, yeah. Their role for Bitcoin is crystal clear. It's the digital reserve asset, the modern version of sound money, digital gold.
Secure, predictable, long-term store of value. That's the strategy model for BTC.
Okay. And then there's BitMine, replicating that treasury success. But for Ethereum, What's ETH's role in their model?
If Bitcoin is the digital gold bar in the vault,
Hmm.
think of Ethereum in the BitMine model as the yield-generating smart asset. It's more like the operating system for a digital financial system. It can be staked, used in DeFi, it generates returns, it's programmable finance.
So one is the bedrock reserve, the other is the active, productive asset.
Exactly. Bitcoin, low utility, high security inflation hedge. Ethereum, high utility, yield generation. Programmatic function, more focused on growth within the digital economy. Different risk profiles, different potential returns, different jobs within a portfolio.
That makes sense. So a corporate CFO looking at this landscape, the question isn't Bitcoin or Ethereum anymore.
No, the question becomes, okay, which layer of my capital strategy does each asset address? You need the secure foundation, maybe that's Bitcoin, but you also might need the productive layer, the growth engine, and maybe that's Ethereum.
So this dual model strategy for BTC, BitMine for ETH, could become the standard institutional crypto allocation, a base layer and a utility layer.
It looks that way. It's the institutional world finally realizing you might need both the foundation and the building on top of it. It moves crypto away from just pure speculation and anchors it in actual corporate financial strategy.
Okay, let's talk about the bigger picture then. Institutional crypto 2.0 and what this all means for the market. You mentioned waves of adoption.
Yeah, it helps to think of it in waves. Wave 1 was roughly, say, 2020 to 2023. That was all about getting Bitcoin accepted as a store of value. The main event there was the launch of Bitcoin ETFs.
Right, BlackRock, Fidelity, the big Wall Street players packaging BTC for traditional investors.
Exactly, making it easy to buy. Wave 2, which we're clearly in now, from 2024 onwards, is different. It's about corporations directly holding these assets on their balance sheets.
As core reserves.
As core reserves, like Strategy did with Bitcoin and now like BitMine is doing with Ethereum. It's not just an investment product, it's part of the company's actual treasury.
And the key takeaway is that Wall Street is now fully involved in both waves and both assets through the ETFs and now endorsing these corporate treasuries.
Absolutely. You've got the ETF giants for Bitcoin, and now you've got Fundstrat BitMine validating the Ethereum treasury model with Saylor's surprising nod of approval.
What does this mean practically, though, for the average corporate CFO out there still maybe hesitant about crypto?
It's huge. It's basically a green light. If Michael Saylor, the ultimate Bitcoin bull, publicly acknowledges the strategic legitimacy of holding Ethereum institutionally via Tom Lee's structure, well, that removes a major objection for a lot of conservative finance departments.
It makes Ethereum look less like a risky tech bet and more like a structured, institutionally vetted asset.
Precisely. It de-risks the decision to consider Ethereum. Even if the asset itself still carries volatility risk, it separates the asset from the strategy.
Okay, but here's the weird part. This news, which seems fundamentally massive from a strategic standpoint, the market barely reacted. In fact, things dipped a bit.
Yeah, that's the classic disconnect, isn't it? Short-term market noise versus long-term fundamental shifts. Right after the news broke, both Bitcoin and Ethereum took small hits, like 2–3%.
And the stocks, too. MSTR and BMNR.
Same story. Strategy Inc., MSTR, down about 3%. BitMine, BMNR, down over 5%. It just shows you that daily price action is often driven by technicals, by macro fears, whatever the flavor of the day is.
It doesn't immediately price in a major strategic realignment like this.
Not always, no. But look at the analyst ratings, for example, on Strategy. Despite the stock dip, they still overwhelmingly point to growth as its strongest factor. The underlying trend of corporate adoption, the treasury strategy, that's still seen as incredibly bullish long term.
So the takeaway is, don't get distracted by the daily chop. This Saylor-Lee thing confirms the institutional bridge is built. Crypto is now officially part of corporate capital strategy.
Without a doubt. And this opens the floodgates, potentially. I expect to see more companies exploring Ethereum treasuries, maybe using stable coins for financing backed by these assets, more yield programs. Saylor and Lee, together in this weird way, have shown the path for big money.
Okay, so let's wrap this deep dive up. The central finding seems pretty clear, doesn't it?
I think so. The era of strict Bitcoin-only maximalism, at least at the highest institutional strategy level, seems to be fading. Saylor recognizing Lee's role with Ethereum is a massive signal.
It's the digital asset pioneer, acknowledging the Wall Street strategist who brought the second major asset into the institutional fold. A convergence.
It really is, and it leaves us with a really interesting question to think about.
What's that?
Are we really seeing the end of Bitcoin maximalism as a dominant ideology, replaced now by purely pragmatic asset allocation? Or is this something else? Is it a strategic corporate synergy play? Saylor and Lee, Strategy and BitMine, are they building a combined, almost unbeatable institutional crypto fortress together?
Hmm. Maximalism ending or just evolving into a two-pronged corporate strategy.
Yeah,
That is definitely something for you, the listener, to mull over as you think about how these two major assets fit into the bigger picture.
definitely food for thought.
And on that note, if this breakdown helped you understand this really quite significant shift in the institutional crypto landscape
Yeah.
and what this new corporate playbook might look like, well, we'd certainly appreciate your support.
Yeah, it really does help.
Engaging with the channel, subscribing if you haven't, hitting that like button, maybe leaving a comment with your thoughts on this Saylor-Lee dynamic. It genuinely helps us show up in feeds, reach more people, and keep putting together this kind of in-depth analysis.
It lets us keep digging into these important shifts.
So thanks for tuning in, and thanks for your support. We'll catch you on the next deep dive.